Welcome back. Well, the big news over the weekend was Quess Corp. They've gone ahead and announced a demerger. They believe that's going to unlock value, and it also has various benefits. Mr. Ajit Isaac, the chairman of the company, joins us on the show. Hi, Mr. Isaac. Good morning, and thanks so much for joining in. Well, the street likes what you've announced. So give us a few factors out there. You know, by demerger, you believe it's going to be obviously beneficial for shareholders. So give us your top rationale for it. And which vertical was being undervalued that you think now it'll get a better, multiple going ahead?
So a bit of the past is also useful to analyze why we did this. When we built this company from 2007 to 2008, it was a human resources company with general staffing and professional staffing. Over time, we added facilities management, and post our IPO in 2016, we added the GTS business. So, which is the technology business. All of these businesses have since scaled. In 17 years since our existence, all of these businesses have scaled to become industry leaders. And if you take a general staffing business today, it's #1 in India. There's 440,000 people. The world leaders are about, let's say, 600,000 to 650,000. So our general staffing business has a good shot at becoming globally the #1 company in that space. Similarly, in the tech space, our BPO business is now about 55,000 people and a sizable leader in India. So we think it has an opportunity to become a billion-dollar company over time. It's about 300 million in sales right now. Facilities management is riding on the opportunity that a new India is creating. All of the investments that's going into infrastructure, into creating capacity in India in terms of ports, roads, airports, public utility space, etc., needs maintenance. So that has immense opportunity. And that's why we carved out these three companies to leverage the opportunities that's emerging in each of these three sectors. Shareholders will benefit from it because there's a clarity in investment thesis. Right. They know which company they're investing in. And I think overall, it's something that works for employees and for clients and for our investors.
Right. Mr. Isaac, we understand your need to improve focus on business verticals at the same time to create pure play verticals for shareholders themselves. You have a target of $1 billion for the overall company, right?
For the digitized business. We are already
for the digitized.
As a whole group, we're in excess of $2 billion already.
Okay. I just wanted to, pull up the graphic of Quess Corp, which has around 68% of your revenues. Digitide is 14%. Digitize is what you want to take, from 300 million to about $1 billion. And Blue Spring, which is 18% of your revenues. I wanted your thoughts on one, what is the margin differential between all these businesses? And post demerger, with the increased focus that you're talking about, what rate can these businesses grow at as compared to your overall consolidated growth? How much faster can these unlocking in what do you say, de-synergized place be, increased focus?
Sure. So over an 8-year time span, our consolidated company, Quess, grew by about almost 24% CAGR. We expect our staffing business to grow between 17 and 18% over a period of time on a larger base. The other two businesses will grow in excess of 20%, or less. In Blue Spring, we expect our business to grow about 4 times GDP growth rate. In terms of margins, our Digitide business is the largest margin contributing company right now. It averages above 16 to 17%. Our Blue Spring business has the potential to get to about 6%. We're right now about 5%, but it also holds the investment of Foundit. Foundit for the last few years has been building its business and progressively reducing its burn. So we expect it to reach cash break even. And as an investment, we hope to find a liquidity event in that sometime, and that will contribute to the capital of Blue Spring as well. So that's sort of the narrative on margins, growth, and investments at Blue Spring.
You know, being the chairman of the company, sir, you'd be the best analyst on the street on the company, according to me. Obviously, sell sides, they'll have their views, and for the time being, the street gives a thumbs up. If you had to analyze the company, currently, if I look at the combined market cap after this 10% move is around $1 billion for the entire company. You've already told us the Digitide business, which is the best margin business. You believe that could be $1 billion itself. What about the other two businesses? What would your estimate be? What could they be valued at?
So I wouldn't venture into guessing what the market would price our shares at. But I would want to say that we had suffered from a conglomerate discount in the past. We expect that to be removed. And we think that these prices will find fair market value in the 12 to 18 months. They're market-leading businesses. They've got good margins. They generate cash. They're a dividend-paying company, low debt levels, and with a remarkable reduction in debt from about 1,100 crores to about 400 crores today. So all of it contribute to building a good investable case for many types of investors. I leave it at that.
So, okay, let's just put it another way then. Currently, because of the conglomerate that you are, how much do you think is your discount because of the fact that you guys are together? If you could put a rough range to that, could it be 20, 25%, maybe 30%? So the street would do the back calculations then. And the second part is, you said there was debt on your books. Once the three entities are demerged, how will that debt be distributed among the three entities? What do the balance sheets look like?
Yeah, sure. So the Digitide business to carry any debt is a cash-generating business. Our listed sub, Allsec, already has in excess of 100 crores of cash, plus Bluespring, plus Digitide and Connect itself will have more cash on its books. Over the course of 12 to 18 months, when the demerger process is completed, we expect a further reduction in gross debt. At the balance sheet level, we are a net cash company today. So we don't expect to carry much debt into the new demerged companies.
Okay, all right. Very quickly, sir, what is the time frame by which we expect this entire process to get completed? And also, since you'll have different business verticals with strategic focus, could there be an option of bringing in a strategic investor?
So we expect the process to take between 12 and 15 months. Finding a strategic investor will be related to the opportunity they bring with them and not for the sake of the money that they will bring, because we are sufficiently capitalized. Because Fairfax as an investor got 90 billion of assets under management. Promoters own 57% of the company. So it's unlikely that we need cash. If there's a principle of additionality and there is something that investors can bring to the table, then we'll be open to discussion, but not otherwise.
All right, and finally, you did allude to some sort of margin improvement going forward, but if I was to look at your numbers, say in FY26, post this entire demerger exercise has been done, the companies have had a year of runway as well, the target revenue and margins for each of the three companies, if you could leave us with that.
So that's a good question. We would think that we have a 100 basis point improvement opportunity in Bluespring, and we'll go up from 5 to maybe about 6% or so. Our Digitide business, we are in the high teens right now. So as we grow rapidly in that business, our priority is to ensure that we stay in the high teens there and not give ground to growth while we grow, and reduce margin. In workforce management, it is a more competitive business because India is a very price-sensitive market in the general staffing space. We expect to improve margins there by about, let's say, between 20 to 40 basis points. So that's sort of the narrative on margin improvement.
Thanks a lot, sir, for joining in and giving us all those details. We wish you well, and we look forward to having a chat with you. You've given us a detailed outlook on each of these verticals. Well, as we're having the chat with Quess